Howdy, Hotshots. Dividend Daddy here, your favorite not a financial advisor with not financial advice. And we're here to see, can Alti recover? Now this video is so important. I set up the tripod. Look, Ma, no hands, all right? I got my pretty flowery notebook with all the little facts and details we need to know to see if Alti can actually recover from this little recent blip on the radar. So I had to dig into the holdings. It's going to be a little bit more of a detailed video. We know the struggles with the covered call strategy. If you've ever sold covered calls before, you know you can take big hits, but it's a slow climb up. And if you're selling at the money options, there is no up. Whatever premium you've gotten, that's your profit, if there's any profit to be had. So, as I say all the time, if you're going to make the bet, you got to vet. But we're going to dig in a little bit here and see, is there any room for Alti to actually appreciate its capital? Now, premiums received is a whole nother story, and this whole recent downturn might actually impact the premiums that you're going to receive as well. We'll go into that on the next video probably, but this video is all about, can the price go back up? Now, I'm sure a lot of you are saying, oh yeah, there's charts and this is a support level and it's going to bounce back up and it reverts to the mean. Now here's the situation. I don't know how important the chart is on Alti. Okay, people like to look at charts and they like to draw their little trend lines and they like to guess where they can put their sell stops and their buy orders and everything. I'm not 100% convinced that it's going to work on this ETF the way that it works on individual stocks, because they trade in and out of the stocks, and where you're deriving your value from in this ETF is its underlyings, and it's not a fixed set of underlyings. So they can move out of one stock and move into another stock in order to capture the premiums that you get with high volatility stocks, because that's what they're doing. They're chasing volatility, and you need to understand that. So when it goes up and down, it's doing that intentionally, because they're picking stocks that are going up and down in order to generate these huge premiums to give you what is right now calculated as about an 88% yield. So do not be surprised when it goes up and down. Now, hopefully they're setting their trades up in such a way that you can profit a little bit, that you get big premiums and that you have downside protection. And we see that they are doing that to some extent. We hope that they're making good decisions and that they have an edge and they know which stocks are going to go up versus the ones that are going to crash. But we don't know that for sure. It's a very risky investment. Those of you who think that you can buy it and you're just going to get 85 or 90% yields and you're going to be able to retire and sail off into the sunset, you're going to need a lot more of it than it looks like on the surface. It looks like you can make big yields and retire early, but when NAV erosion eats away at that yield, it's not as pretty as it looks on the surface. But we're going to see, can it come back? Can it go back above $6? All right. So I got my pretty flowery notebook here and I got my figuring going on. Let's dig into it. This might be a couple minutes. You might as well pour yourself some cheap vodka and light up a Pall Mall. All right, guys. We've got a firm. Now the recent price on a firm, $78.72. All right. They are short these $78 calls. Does that leave any room for appreciation? Not a bit, okay? Probably the best way that they could recoup some of that investment right now is to sell the puts and just have those shares naked and not have the puts. They could recoup a little bit of premium that way, and maybe that's what they'll decide to do, because they do have some protective puts on most of these positions, if not all of them. I was more looking at the calls than I was the puts. With this little bit of a deep dive, all right? So it's already in the money. Their calls are already in the money. They can roll them out and generate more premium because their calls are pretty short dated. So they can roll them out and do a little bit of a recoup there and generate some extra premium without giving up the shares. But those calls are in the money. So there's no more profit to be had on those individual calls. The best that we can hope for is a firm goes down to $78 and just levels off right there so that we can hold on to our shares and not have to give them up, but we don't lose any of the premium that we've already gathered, okay? Applied Materials, now that's the one that went down 14%. That was a big drawdown on Alti on Friday, and on my own personal account too. Applied Materials is at 162. They have not much more downside that they would have to worry about because they do own the 155 puts and they have 175 calls. So if Applied Materials rebounds and they have not yet rolled those calls down for added premium, then we could get some of the money we lost on Applied Materials back. All right, and if that's the case, then that could boost Alti's price a good bit. So that would help us towards getting back to that above $6 range. So they're short 175 calls, and it's a 162 price stock right now. So there's $13, not quite 10% of gains that could be had in that. Now, if it goes up that $13 and levels off so those calls expire and we can generate some more premium, that would that would be the ideal situation with Applied Materials. If it goes up $13, that's not quite 10%. Let's use round numbers and just guesstimate, make a wag that it's 8%. If it goes up 8%, does that mean that Alti is going to go up 8%? No, it doesn't, because Applied Materials is only one of their holdings. So I don't have the percentages written down here, but let's say 4% or 4.5% of the ETF is in Applied Materials. Even if it goes up 8%, that is not going to cause Alti to go up 8%, all right? It is not dollar for dollar because it's not 100% of the fund. So when you have a fund like HUI or like, MSFO or MSTY, those are 100% invested. I'd have to go check, so don't take my word for it, but I think they're 100% invested in each of those stocks. PLTY is Palantir. If those stocks go up, it's going to have a lot greater impact on that fund. Also on the way down, if it goes down, it's going to have a lot greater impact on that fund. When one of the stocks in Alti goes up or down, it's spread out. It's diversified more amongst many holdings, and so it's not going to make a huge impact. So if you see, Applied Materials running on Monday and it's going right back to where it was, that is great for us, but it's not going to fix the whole situation. AppLovin, 438.68. Their calls that they are short are 450 and 455. So there is some room in there. What is that, about 2.5%-ish, a little bit, that it could go up before their gains are capped. So you could make a little bit of money on AppLovin. And let me tell you, based on the numbers that I'm seeing here, in order for Alti to go up a couple percent, the stars have to align. Everything has to be perfect. All of these stocks have to go directly to their short call strike price and just stay there in order for Alti to make up the losses that they've had the last 4 weeks, okay? So this is not a guarantee. This is something that if we get extremely lucky, if the market does exactly what we want it to, we can see some appreciation. Otherwise, some of them go down, some of them go up a little bit. It's going to average out and maybe just stay right where it's at. But AppLovin is 438.68, and we've got 450 and 455 calls short. ASTS, I don't remember what that one is. It's 48.08, okay, and they are short the $51 calls. So there's, once again, about $3 that it could go up and we can profit from. Beyond that, we're not going to profit from that position. In fact, if they decide to offload the puts at some point in time, it going above $51 actually could hurt us because it could reduce the premium that we can recoup on the puts. Now, I don't know if they plan on holding the puts till expiration, if they roll them out, if they buy them back, if they sell them and offload them in order to recoup premium. I don't know what their plan is with the puts on all these positions. But if the stock goes up beyond our strike price on our calls, we cannot make any more appreciation. Plus, we will lose more on the puts that they have bought for protection. Okay, so it's not ideal that it goes up a lot. You don't want Applied Materials to go up to 200. You want it to go to 175 and just stop. Okay, that's what you want it to do, because then you still have those shares to generate more premium the following week. You've basically maxed out the profit that you can make on the upside, and you've maxed out the premium that you can get. So you don't want these things to just skyrocket. You want them to go up to the strike price of the calls and just stay there. Okay, enough on that. Bitmine, 57.81. They have 70 and 75 calls. Okay, so that's actually, if Bitmine went up quite a bit, that's one of the best places where we could make up some of our gains, because they've got 57.81 and they've got half their calls are 75s. So that is almost 40%. Almost 40% that you could make on Bitmine. So we want Bitmine to go up. So let's hope Bitcoin does well this week. Webull, $16 is what it's at, and they are short 16 and 16.50 calls. So there's like 50 cents that you could possibly make there, but then they're either going to have to buy back the $16 ones at a loss, or they're going to have to lose part of their shares of Webull. So, you know, $16 is a good place for Webull to be right now, considering the calls that were short. Let's hope it stays there. Coinbase, $317.55, and we've got 335 calls out there sold. So there is a little bit of money there, maybe like 6%-ish that we can make on the Coinbase position. Galaxy, 2609, and we're short the 29 and 31 calls. So if that could go up to $29 and just sit right there, that'd probably be best for us, which is going to be a little bit over a 10% gain on that position. IonQ, $40.23, and we're short the 43.50 and $44 calls. So there's a little bit there to be made to about 8%-ish again, 8 to 9% again that we could possibly make on the IonQ position if it has a good week. But not a whole lot. Mara, $15.67, and we're short the $16 calls. So we want it to stay right where it's at. We really don't want that one to move. MicroStrategy is 366.32, and we're short the $390 and $400 calls. So you can see that the Bitcoin and the Bitcoin market in the last week has really put a dent in Alti's price by how far away from the current stock price these calls are. Because I'm assuming they sold them basically at the money. So if we're at 366.32 on MicroStrategy right now, and the calls are 390 and 400, I'd have to go back and dig into their daily trades and see, but I bet you we probably had a cost basis somewhere around 390, and they were selling at the money calls for that. Now we have fallen down. The calls are further out of the money. They're worth less, which is good for us. It cushions our blow a little bit, and it gave us some room to regain some ground. Not quite 10% there either. So if that one goes up to 390, would probably be ideal for us. Firm, 78.72, and we're short the $78 calls. So there is no way that that's going to help us make up any of our losses, because we're already in the money on those short calls. So really what we want a firm to do, we probably just want it to hang out right where it's at, maybe even drop down by 75 cents or $1, and that would be good for us. Let's see here. We've got MicroStrategy, and now we're on Nebius, $71.62. We're short the $71 and $74 calls, so we have no room there, no real room there. I mean, it could go up to 74 and we would still profit on half the position, but the $71 calls are already in the money, so I don't actually want that one to move. It could stay right where it's at. Oklo, $71.06 is the current price, and we are short 76, 77, and $80 calls. So we could make up 10% there on that position, which overall might, I'd have to look at the percent that Oklo is making up of Alti. Let's call it again 4 or 5%. So if you make 10% on that, you're looking at like a 0.4% rise in the price, which would be like 3 cents maybe. So not a bunch of money on any one of these positions is going to make a significant difference in Alti's price. And so that's why I said all the stars have to align for us to make 20 cents in a week. They just really have to align. Or the other option is that we could wind up paying more premium for the fund than compared to the underlying. Because right now we're at like a 0.17% premium for the ETF price as opposed to the NAV price. If that got up to 0.25%, 0.3%, that could make a couple cents as well. But for the most part, these holdings have to go up in order to move Alti's price, and they can't go up past our call strike prices, our short call strike prices. So if something goes up 10% and we realize that whole 10% on that position, we're really only gaining like 0.4% on Alti, which is going to be 2.4 cents or whatever it is. Palo Alto Networks, current price is 177.09. We're short the 185 calls. So, there's about a 3.5–4%, just throwing that number out there, kind of amount that we can make on that. It's definitely not, it's not even 3%, I don't think. Palantir is 177.17 right now. We're short the 187.50, the 190, and the 192.50 calls. So there's a little bit of room there, not a whole lot, but a little bit of room there. If it went up $10 and expired right under the 187.50 strike call, that would be my preference. Reddit, 246.50 is the current price. We're short the 245 and the 250 calls. So we don't really want to be making any money on Reddit. We want Reddit just to fall flat right here. We want it to just stay right where it's at. Maybe even go down a little tiny bit would be good for us. Rigetti Computing, 1665 is what the stock is valued at right now. We're short the 1750 and 1850 calls. So there's a little bit of money that we can make there. Rocket Labs, 44.27 is the current price. We're short the 45 and 45.50 calls. So we're right there. We don't really want Rocket Lab to go up at all. We want it to stay right where it's at so we don't have to lose those shares. And then we'll be able to roll out our calls, or we'll be able to sell new ones at the money there. Super Microcomputer is 45.37. We're short the 47 and 48 calls. So there's very little room for that to go up without bypassing where we can make a profit. SMR, 35.47. We're short the 37 and 37.50 calls. So there's a couple bucks there that we could possibly make. Target's a good one. It's 103.02 right now, and that one's actually, I hold that one individually too. It's paying a pretty good dividend right now. I mean, nothing compared to Alti's yield, but it is paying a decent dividend. I'm in the red on Target. I was cost averaging down on Target. I'm also losing money on Target on Alti now. So, I kind of doubled up that position. 103.02 is the current price, and we're short the 110 calls. So there's a little bit of room there, maybe 6%-ish that it could go up. And it probably will. My opinion, Target's been up and down recently, which is probably why it's in Alti, because it's got some volatility. So I wouldn't be surprised if that went up a couple dollars and helped us out for a penny or two. Tesla is at 330.56, and we're short the 345 calls. So we could go up about 5% on that one. Go up about not 5% on Alti, 5% on the Tesla position in Alti, which would, in turn make us a couple pennies probably. Unity is at 38.01, and we're short the 39 and 40 calls. That's not really one that can move much and help us. Upstart is at 64.09, and we're short the 66 calls. So that one's not going to help us out either. So there's a dozen positions in here that have a little bit of room to go up and help us with our NAV, but it's going to be a tough climb back up because we have such limited upside because of the covered calls, and yet we still have more downside. Now there is some protection. Like I said, we'll go into that in another video because this one's already getting too long. So is it possible that Alti goes back up above $6 in the next few days? Yes, it is possible. I mean, based on these numbers here, in my opinion, it's possible. But then again, some of the stocks that are right close to where our covered call strike prices are could go down. You would almost need every stock that we have to either stay the same or go back up in order to get above $6 in the next week. What they need to do if they want to recover Alti's NAV is they need to generate a little less premium over the next couple weeks and sell further out of the money calls to give these stocks some room to go up. So if I were giving advice to Alti, that's what I would say. I would say you need to cut the dividend a little bit for the next few weeks, and you need to sell covered calls that are a little bit more out of the money to give you room to make up that loss of NAV. That would be my advice. I don't know if you agree with me. If you don't, put it down in the comments below and tell me, Dividend Daddy, you're a dumbass. We don't agree with you. We want as big a dividend as we can get. We don't care what happens to the NAV, but just remember, we don't want it to go so far down that it has a reverse split. We don't want it to go so far down that the institutions can't buy it, because if there's any institutional buyers, and I haven't looked at the institutional holdings of Alti, but if there is any, then they would have to offload, and that could push the price down even further. So, you know, bear in mind that we do want probably a $6 to $10 range on Alti's price. We don't want it to drop below $5 for too long. All right, D-Gens, I'll see you next time.